Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to talk about economic data, how that impacts the overall markets with some market analysis, maybe sprinkling a little geopolitical fodder in there, and then talk about some option strategies we could implement into a portfolio based on those assumptions we come up with. All right, so without further ado, across the pond, economic data, we were getting CPI, Consumer Price Index, in line with expectations out of the European region, maybe a slight tick of a 10% lower, coming in at 7.4%, expected to be 7.5. I don't think that's going to be a headline number that people try to justify market action from. Even here in the United States, we got our core CPI, or sorry, that was Canadian core CPI in line with expectations. Here in the United States, though, we did get our building permits in line with expectations, 1.8 million being pulled. The starts, though, waned a little bit, coming in at 1.72, expected to be 1.75. So 1,720,000 versus 1,750,000. They also revised last month's number down by 600,000. So a miss on that front headline number there. Not really surprising if interest rates are going to continue to rise. Higher interest rates means folks can afford less of a house. So not really a major surprise there. One thing that's really driving the markets, let's just get on with the markets here, is earnings. And we've been talking about this from the beginning. When we started seeing these rollovers in the markets, I've been talking about how folks are going to start worrying about forward multiples. How do we justify the price of a stock? Actually, I've been talking about this more in the webinar, sorry. How do we justify the price of a stock? It has to do with forward multiples and things like that. Well, when we don't see that economy performing like we had expected, well, then those forward multiples aren't going to happen, right? So if they're not going to happen, we have to adjust the prices based on what we see going forward. And then those multiples become based on less revenue and not as many multiples. Okay, so that all really exacerbates the downside moves in the overall markets. And then on top of it, we have names like Target coming out with earnings today, worse than expected, really exacerbating the downside move here in Walmart. You know, I talked about yesterday in the video, Walmart was the name that I was expecting to hold on a little bit, at least come down to this Fibonacci and hold that mark. It was opening up at around 135 throughout the day. We saw some real weakness in there. The headline number did beat on the revenues, maybe not the earnings per share so much, but the basic earnings was rather decent here and not really enough to cause this kind of sell-off. As a matter of fact, you can see we're another $2 lower, mostly based on Target coming into the market and really, as you can see, down almost, I think, 40% there. My math is right in my head. So we're seeing this market really fall and on pre-market here. So we're well below any of this. As a matter of fact, let's just drop it out, see how far back it goes. This is a weekly chart. So if we go back to that 160 area, we're talking right around in here on that first recovery. So we could probably throw in some Fibonacci's if I have it signed up or lined up right. No, I have a drawing here. Let's throw some Fibonacci's on there real quick and see what it looks like. See if there's any major supports on the 3-year move there. And it's not going to be super pretty. As a matter of fact, I'm going to drop to the twin tweezers there. You can see here we got this broken support there. The next stop is 146 then. If that's going to be a line in the sand, it doesn't look like we'll probably settle above 169 today, but that's what I would be looking for if you're looking for any type of silver lining here for Target. Now, with that said, ahead of time, remember I was talking about I do get in a little bit early. I looked at this bottoming pattern, thought that the number yesterday was pretty decent and was expecting a little bit of upside here in the overall, brick and mortar names that like this that I was talking about. With that said, though, I got involved in this Walmart, sold the June 125 puts in there for $1.60. So the 125 puts are just slightly below where this next Fibonacci is. We've got them trading at around 129. This Fibonacci is what is looking to hopefully hold there. It's the 50 Fibonacci, so I'm hoping it will. I'm just slightly below that with my strike location. High volatility, I was able to get much further away, get a couple of extra support levels there. Further, we can see that we are getting some volatility coming out. And if I get that volatility coming out, what does that mean to the prices and the options? They all come off as well. So despite the fact that I could be slightly directionally wrong here with this market, as you can see, with it starting to want to roll over here. Sorry, I'm trying to get my pin up here. Oh, it popped up at the last second. Give me a second. It's just taking a second. Anyway, I want to draw a couple lines in here for you real quick so we can talk about this. And maybe it's not going to give it to me. I don't know where. It must be hiding somewhere. All right. Anyway, what I was looking to do is talk about how we got this Fibonacci here. I'm trading down and around this level with my 125 puts. Plus, remember, I collected a 40-cent credit there for that. Actually, I think I might have collected a little bit more for that. Sorry, nothing wants to work today. All right, sold those at 160 in Walmart. So my break even on that would be $1.60 below that. So we're talking like 123.40 is a nice level for me to have as well, I think. All right, so with that, what was the other one that I did that we were talking about? Home Depot. Home Depot came out with earnings. Looked like they were going to be a little bit better than expected. I did get that boost to the upside. I think, though, with today's weakness with Target and everybody else, it just looks like, despite the fact that earnings might be coming out better than what we were expecting, what we expect now is a little bit different than what we were expecting before. Before, we were expecting a better economy. We were expecting we were going to come out of this. We were going to see transitory inflation. Now all of those things are kind of out the window and starting to see inflation that might be staying here with wage inflation and other things. So this could be a definite headwind for some of these folks with shipping. If you guys have been following me on Twitter, you watched me talk about this past week. Since Mother's Day, I bought some shoes for Mother's Day. They got shipped from Texas to Arizona. From there, they turned around and went to New Jersey. From New Jersey, they turned around and came back to Arizona. From Arizona, they went to California. From California, they then turned around and came back here. We haven't received them yet, but they have gone coast to coast. All right. So, and the cost of that shipping with the gas, it's got to be pretty astronomical. At least I know I did better on paying for my shipping than what they did for paying for shipping. So with Home Depot, let's talk about this. I went into the June as well, those shorter duration options, less than 35 days to expiration. I want that data decay to be really helping me out. You know, that thief in the night that comes and steals your premiums can help you when you're selling options. So I went in and selling some puts at the 270 level in June for $4.60. Now you can see with the volatility really coming out, got the directional move that I was expecting there. That helped out quite a bit. Now today looks like it's starting to roll over. I'm going to look to cover these trades rather quickly today. As a matter of fact, I'm going to put an order in to get out at around 50% of max profit. So with these June 270 puts that I sold at $4.60, I'm going to try and buy them back for $2.30. I'm going to put a working order in there, GTC, to get out of those. And then Las Vegas Sands, we've been talking about doing covered calls on the stocks that we own, despite the fact that on a weekly pattern, this is weekly, Las Vegas Sands looks like it could be finding a bottom there. I go to the day pattern, we did get a bottoming pattern there as well, breaking higher and trying to get back into the value area. Those are things that I was looking for with that. But if it gets up to the value area, that's going to be a place where I think it'll start to settle down. And if you remember, I got involved in this by selling some June 41 puts in there, June 39 puts in there, and got that stock put to me. I've talked about the lowering of cost basis over time. I don't have enough time to really go through all those details right now. But with that said, I am long at 39 in the in Las Vegas Sands, and then I went in the June, and I'm looking to sell the June 125 puts, the June 41 calls in there to try and get into that high theta decay. We've got high volatility coming into this market. So hopefully Las Vegas Sands is what we're looking at here. We get this volatility to continue to come out, gets me good strike location. So I'm long at 39 from getting put to me. I'm looking to sell some June, like I said, 41 calls in there for 45 cents. So on the open, I'm going to need a little bit of a move to the upside to try and get those, but a little pop, then a drop will work out quite nicely with this trade. So looking for covered calls in that. The June puts in Home Depot and in Walmart, I'm going to look to cover those. Walmart not looking too good. I sold those at 160. It's trading 185 or something like that. So looking to get out of Walmart for a small loss. Hopefully can make up for that in the Home Depot trade. That's all I got for you folks. Check out the webinars. Make sure you like, subscribe. If you hit the bell right next to this subscribe, it'll get you in on these videos that I pop in and announce. All right. So if you can't hit that, take it easy. Bye for now, folks.